What's up everyone, this is Shizzy from Profit Gang. In this video I'm going to walk through every single setting in the Profit Gang indicator. This is not a trading strategy video, this is not a watch me trade video. This is a full settings breakdown so you understand what each toggle does, what actually matters, and what most people should leave alone in the settings. There's a lot of different settings in this indicator, so I'm going to go through them all and give you my reasonings behind them, what they do. And then as a user, you can pick and choose what you would like, maybe design your own model based on just iFVGs or both CISDs and iFVGs, different things like that. This indicator is modular, so you can turn on and off different things. It doesn't mean you'll have more or less entries, but the more you have on, the more good trades you can block. So that's why I made it modular, so not everything gets blocked. You can pick and choose what you want. But this video is meant to be your foundation on how to use the indicator, and let's get started. Get straight into the settings of the indicator. Once I go through this, I'll probably make another video and then we can do some back testing, some live trade, and you can really see this indicator in action. But it's very important to understand these settings first so you know what you have on and off, and then we can go from there. So it's pretty basic overall, and it's pretty self-explanatory. So some of them might be a little bit confusing, especially if you don't know my model or ICT. So I'll explain a little bit now, and then I'll do more in-depth videos later on my logics and the reasons why I did add these things in the indicator. So we'll start right from entry display. Pretty simple, show CISD entries. So I always have this on because this is my main reason for entering a trade. CISDs are change in state of deliveries. So basically these sweep liquidity, then close over the leg that swept liquidity, and that usually is a sign of a reversal. iFVG entries are basically when, for example, you can see this box here, we had a bullish fair value gap, we closed below it, and a lot of times an inverse fair value gap will occur before the change in state of delivery. I personally like having both, which is why I have both on, because sometimes, especially after external liquidity sweeps, the inverse fair value gap might not be too strong or meaningful until we get that change in state of delivery. And then once we get retracements and continuations, then usually they're a bit more confluent with the structure. You can see here, external, we had a CISD in an iFVG, and then the retrace only had a CISD here. And then the continuation, which was a bit stronger, shows that the retracement was weaker. We went below this bullish gap on the 5-minute, and then that's why we got the plot to go short on that trade. There's also an option to show only entries that have the CISD and the iFVG. These are shows that it's much stronger. So it would have blocked out an entry like this one here. We would have kept this one. Here's another one that was already a continuation from the previous, so it would have blocked this one out. And it's pretty self-explanatory. Show both. And then the show confluences, if you turn this off, you'll see this label on the entry will go away. It does make my chart a little bit cleaner, but if you're new to this or just new to trading in general, it's good to have the confluences on just so that you can see why this entry plotted, what caused the entry to plot, what's delivering, what happened, what was swept, like the MTF sweep. This would mean that the previous MTF candle was swept. So that could be a whole model in itself. Here's a Killzone sweep, so we swept London lows and then had change in state of delivery, and that's why this entry plotted long as an extra confluence. You can use these confluences for your trades. Let's go back. So that's just for the display of arrows and confluences on the chart. And if you really want to filter out your entries overall, with maybe you only want continuation, or maybe you only want external entries and you don't want to trade the inside mess of continuation and retracements, you can turn some of these off and clean up the chart a lot, but you might miss some entries, so you have to be very careful of that. The way my indicator is set up, it always starts with external, so you always have to have external sweep entries on, but you could turn off internal continuations, iFVGs. Like I said earlier, I don't like standalone iFVGs, especially for after external. I like to see some structure formed. And when it comes to a standalone iFVG for a continuation or retracement, usually those are paired with a CISD anyways, but some people like iFVGs only and can use them as an earlier entry, so it's not always a bad idea. You can see right over here, we had an iFVG, we closed over it. You can see there's nice momentum. We're delivering from a gap, and we had a nice move up. So I personally like to have the CISD as well, but sometimes you can see it could be way later in the leg, and at that point, we probably already are close to the drawn liquidity before we push down, and then we have to wait for another continuation or external liquidity to be swept here. So that's what those are here. I'll go more in depth with these on more videos of these, explaining CISDs, iFVGs, retracements versus continuations, and the standalones. Like I said, the standalones are pretty self-explanatory. If I turn on them, you'll see way more entries on the chart plot, especially right over here. You'll see probably one right over here because we inverse this gap, as long as it does align with the time. So this one didn't align with my MTF bias being on, but you can see right over here, this was strictly just an iFVG. It was a continuation from the last trade. So sometimes it's a later entry, but most of the times it can be an earlier entry. Right over here, there was an earlier entry, and then the CISD confirmed it later. But I just like to keep my chart a little bit cleaner, so I turn off the standalones. Totally up to you what you want to do with those. So now for external entry filters versus internal entry filters, they're basically the same thing overall. For internal entries, the main difference that I've added so far to the indicator is having premium discount on the internals of the external leg. So for example, the premium discount that we see from the swing high to swing low, this would be the external leg, but maybe you only want to short from premium, so it'll only show entries that are in premium and block any shorts, let's say, that are in discount here, because at that point you're too close to the swing low, and we could easily just sweep that and then continue it back up. So this waits for the move back into discount for a short, and then you could trade short, versus this is discount for long. So you could, if you were, let's just say, I'm probably going to push down a little bit more, but let's just say we start squeezing back up or going back up in a long trade. If you do see a long entry here, you can enter here just because we're in discount, versus entering up here. The risk to reward would be way more skewed, because you would have to have your stop loss technically at the swing low, and it'd be way bigger if you're trying to target the swing high, unless you have a higher time frame drawn liquidity. But that's just the basics of that part. But require MTF bias on means that MTF is, like I said earlier, there's the lower time frame, which is the 5 minute, 15 minute, depending what it is. But then the way my model is, it's based on time frame alignment with ICT models. So I like to make sure that my 5 minute entries are aligned with the open candle of the MTF, which on the 5 minute would be the 1 hour. So this require MTF bias would mean the 1 hour bias would need to be either bullish or bearish, and then the 5 minute would align entries with that. So for example, you can see on my table here, CISD bias for the hourly candle is bearish, and the higher time frame bias is also bearish. So the 1 hour and the daily align with the 5 minute, and they're both bearish. So if I turn this on, require HTF bias, middle time frame, higher time frame, both of these would need to be on, and if that was the case, only bearish entries, only short entries would plot, since the higher time frames are bearish. And that's a good way to trade. It's a good model, and you're really aligning yourself with the higher time frames. But if I turn those on and turn this off, for example, internal and external, you'll see the long here will most likely disappear. It's based on real time, so at this time of the day it could have been bullish, but you can see all these completely went away because they didn't align. This short meant that the 1 hour and the daily were both bearish. See, changes to the delivery on those time frames were bearish, and that's why these entries plotted. And I personally I don't really use those too much, just because you don't really catch reversals, especially after the huge dump we had last week. You wouldn't have caught any of this reversal. So it's good for swing traders, and you really want to be entering at the right places. If you're entering so low in discount after a huge dump down, that's gonna obviously hurt you, especially if, let's say, you shorted here. You won't get much of a move unless you target the equal lows or the entry in this fair value gap. So arrows really tell the story. So obviously the chart tells the story, but based on entries, it's based on certain things that your filters will have on. So if I turn those back, if I turn all of those off, every single entry on the plot that's a change in state of delivery is going to plot. And you could trade this, but you can see here this one appeared, but on the other higher time frames, if I turned on with my MTF open bias filter, whatever you see disappear means that the 5 minute did not align with the 1 hour open bias, and that's why those entries would disappear. So some of these plotted here, some of them didn't here, and you could have caught quick retracements, but you can see this move was way stronger than this shallow retracement, and technically this was a continuation because of the bias was bearish still overall, I guess. But I try to align just to hide the small pullbacks and the non-meaningful entries. And even then, not all of them are going to be right, but that's why you have to understand. Let's just say you shorted here, we're in a 1 hour fair value gap, so unless you really see some strength and a close below it, that would be a reason to go short. And you can see we bounced out of it, trapped people short here, and then we had the long here, and that really made a nice move up. And that's that. So require higher time frame open bias would mean that you will only want trades that align with the higher time frame. So if I'm on the 5 minute, this would mean if the daily is bearish, then it's going to only show entries that are bearish on the daily. So the 5 minute will also show bearish entries. So you could just trade that if you wanted, and then you would see 5 minutes. If the daily candle was bullish, 5 minute will only plot bullish entries to go long. And require SMT. This is a little bit more technical. Some of you might not understand it, but if I turn this on, basic only arrow that plot will be those that have an SMT in. An SMT is a good sign of a reversal coming into play. If you do see an SMT, what that means is, for example, on M and Q, you can see there's an SMT here. The indicator draws it out for you. So that means that right here we made a lower low, but ES, you can see SMT with ES did not make a lower low. And once this CISD does confirm bullish, which would have been a close over here, or actually technically a close over here because of the liquidity that was swept from this CISD. So once that occurred, the long entry plotted, and the only reason it plotted is because there was an SMT. So you have to understand that. You can see this was a quick turtle soup, and then right at 9:30 open, and then it pushed along, and then this was a lunchtime external CISD IFVG entry. There was also an SMT, and it's a little bit late. I'll probably work on things like that to have more local SMTs, but it was based on this last entry that plotted on the 5 minute right when we opened today. We just pushed up for the most part. So that's what SMT is. I'll go more in depth on that. If you have any questions or comments, please leave them below or in the Discord, and I'm happy to answer them for you. So require MTF FVG means that we need to be delivering from a fair value gap on the middle time frame. So if we're on the 5 minute and you require MTF FVG, let me turn those on. Entries will only plot if they are being delivered from a middle time frame fair value gap, which in this case would be on the 5 minute would be the 1 hour. And like I said, I'll go more in depth with my time frame alignment, the time frames that I use. But if you're using my indicator, you can see on the table my middle time frame and the higher time frame. So on the 5 minute, you're looking at the 1 hour and the daily. Let's just say the 3 minute, you would be looking at, I'll show you, it's the 30 minute and the 4 hour, but the table will show you that. So you don't have to guess or remember, the table will show you what's going on there. So you can see 30 minute, 4 hour. Let's say we're on the 1 minute chart. That's based on the 15 minute candle and the 4 hour candle. And you can see 15 minute and 4 hours. So if the 15 minute candle is bullish and the 4 hours bearish, you're probably going to see a little bit of chop, and you would want to wait for the 4 hour to be bullish in order for really strong entries to start, showing that there's some strength. And you can see we're pulling back here. We're bullish here, but we're bearish here. So we have to wait for both of those to align to really start seeing some clean moves. But back to where I was talking about, I like to stay in the 5 minute for most of my trades just because you get clean moves overall. It's aligned with the daily time frame. But this entry plotted here, because we tapped into a middle time frame 1 hour fair value gap. Same thing here, we are delivering from a 1 hour on the higher time frames, and you can see this was the 1 hour. We eventually closed below it, which is why it disappeared, but this would have been the 1 hour on the 5 minute there. So all these entries are being delivered from a 1 hour fair value gap on the 5 minute. So that's what this would mean here. Lower time frame fair value gap on just means that you would want entries on the actual lower time frame. So in this case, it would be the 5 minute. So if there's an entry that does plot, for example, here's one, we were in a lower time frame fair value gap right over here. We had a long entry, and like I said, you don't only use one, you can use multiple confluences, but the more you have stacked, the stronger the entry can be, as long as you're aligned with higher time frame bias and knowing where the drawn liquidity is. This indicator is just a great helping tool to stack your confluences, and when you do see an entry, make sure it lines up with your model, and or you can just blindly trade, but sometimes you'll get stopped out. But if you have risk management, you can still do well overall, especially on higher time frames that are bigger moves. So that's lower time frame fair value gap. So that's what this entry here plotted, just because we had a little 5 minute bullish gap from somewhere over here. Looks like I got close, and then I plotted. Let's see. Maybe it could have even been, it's hard to tell. Looks like it was this one here. We got close enough to it, so maybe that's why. It's something that I can work on just to make sure that it actually touches. And I'll also add a confluence in the confluence section, so you can see that lower time frame fair value gap was also tapped. So continuing on with the indicator, so I already went over premium discount with the internal entries. I didn't include it for external because you can't really calculate premium discount of the leg unless you're using it on the higher time frame. So that's something that I'll work on for the indicator, probably premium discount based on the leg on the middle time frame, and then that'll be a good way to filter out entries so you're not longing too high in the higher time frames. So certain filters that you can have on, these are technically models that you can also just trade. So requiring a Killzone sweep. So if this is on, only entries that swept a Killzone, all these boxes here that I have are Killzone. So for example, London here was swept. We had an entry right after, and that's why this entry plotted here. We can see in the confluences it had a Killzone sweep. Over here, whoops, keep doing that. Over here, this was lunchtime. You can see we swept New York AM opens high, the New York AM Killzone, and then this was the first change in state of delivery afterwards, and that's why Killzone sweep plotted here, and didn't have a strong move. Today was a very trending day, and you have to understand we still had a 2 hour trade, so taking partials at internal lows, higher time frame, middle time frame fair value gaps, you have to understand the overall market and try and draw on liquidity and use that as your confluences. Like this was a good trade for a 2 hour, but obviously this was a better trade right on New York Open, just because it's right at the open, there's more momentum, more volatility. So a Killzone sweeps a Killzone first, and then you wait for the reversal and then take your profits, or you could target the other end, 50% of the leg you're in. You could target a fair value gap, different draws on liquidity, but Killzone sweep just make sure that we sweep a Killzone first before entering a trade as a stronger confluence. And then MTF candle sweep would mean that we need to sweep the previous MTF candle. So I always say MTF candle on the 5 minute is the 1 hour. So basically here we swept the 8 o'clock candles low. We swept a bunch of lows, but let's just say 8 o'clock low right here was right over here. This looks like the lowest point, probably anywhere around here. This was the 8 o'clock candle. We swept it, and then we had a change in state of delivery long, and that's just another model in itself that clearly made a nice strong trade, especially at the open with a strong volatility and momentum and whatnot. So if you have that on, we're going to sweep the previous MTF candles low or high before a longer short plots. And right over here, I have higher time frame, middle time frame candles plot on the chart. So let's just say, for example, right over here, this is this short entry right here. It happened because we swept the MTF candle. What time was this at? This was at 12:30. So if we went back, it probably would have been this entry right over here. So we swept the candle. The way my MTF sweep logic is, we sweep the previous hour's high in the 5-minute, and then we close back below the opening candle of the 1 hour. So right over here, we would have had to close back below. And this is just a great visual representation to show that we swept the previous candle's high and then close back below to, you could target 2 hours as well as another Confluence. And that's what that is. So obviously there's also filters. If you only want to show long entries or only show short entries, you could have those on specifically. So let's just say your high time frame is bullish, you don't want to see any short entries, you could turn those off. And as long as your bias is right, you take the long entries, and once your target is hit, you're good to go. And another toggle that's here to avoid opposing middle time frame fair value gap. So let's say we're in a middle time frame fair value gap. So on the 5-minute, we're in a 1 hour bullish gap. It's going to block any shorts here. If you are right over here, if I turn avoid opposing MTF fair value gap on, you're going to see, let it load, give it a second, this entry went away. And you can tell that it was useful, because if you're in a higher time frame, you might have a higher drawn liquidity, so we didn't hit that yet. And if you don't want to see short entries that are in this gap here, you just turn those off there. They can be helpful to prevent yourself from getting stopped out, unless you really start to see strong displacement in the gap or close below 50% of it. Usually that's a good sign that we could be going lower. So require displacement body. This is a good way to filter entries that are weaker. So if I turn those on, you can use the presets that are there. You'll see, give it a second to load. I'm going to have it on here so you can see a lot of smaller entries like you can see here. Sometimes right over here, that's why I have them on or off. If you don't think the entry short was strong enough here, then it wouldn't have plotted the entry, versus right over here, you can see we had a nice strong bullish candle, but the draw on liquidity was very close, and we hit the draw and then pulled back down. But if you have these on and the candles look like they're weaker, you can adjust them. So let's just say we had a 0.4% of the range displacement. It might actually show the entry here, but it's all up to the user and how you want to filter your entries and exits. A lot of times if we're in chop and we don't have these on, you'll see a lot of the accumulation entries, but this helps to clean up a lot of them. Give it a second to load. There's a lot to this indicator, so sometimes it's a little bit slower, but once this loads, it's going through a lot of entries to filter out. But you can see a lot of them got cleaned up over here in the accumulation area. So I like to have these on, especially in accumulation, just so that you're not getting slower entries or weaker entries. You wait for the actual stronger displacement candles to help your confluences. The require iFVG means, let's just say there's a bullish entry long right over here, or let me find another example that's a little bit cleaner, like right over here, this entry here. If I turn this on and there's a fair value gap, then the entry will plot. If there's no fair value gap in the displacement leg before the CISD confirmed, then the entry is not going to plot. So that's what require iFVG during displacement. This is just, like I said, another confluence that you can stack before taking a trade. But sometimes you can have literally none of these confluences and you'll have such a clean entry, versus you can have all the confluences and then have a pretty bad entry where you just get stopped out or trapped in. But try to avoid whatever you can based on your model and what you like. So show RR targets, or showing the risk reward target. So if I turn that on, where is that? Should move that below, but if I turn that on, it's for the show entry boxes. So what will happen here, if I show entry boxes, let me just do that real quick. When an arrow plots long, it'll show you an example of where you can put your stop loss or where you could put your take profit. So right over here, there must have been a long and a short. So let's just go right here, for example. It's set to go long right over here, which is why that white line, that's the entry. You can put your stop loss right at the swing low or the closest pivot, which would be right here. And then these are based on your risk reward. So 1 RR, 1.5 RR, 2 RR, or it could be 1 RR, 2 RR, 4 RR. These are different targets that you can take partial profits in. If you see these line up with these liquidity lines here, that's a good place to, we might hit 2R just because of the confluence of these stacking up, the RR plus liquidity areas. Because a lot of people trade for RR, and then a lot of people will trade to target internal liquidity. So you pick and choose what you like. So that's what that is. And you can adjust the RR. So 4RR would be this one up here. If you don't want to go that far, you can do 2RR, 0.5 RR, and then 1R, for example. And then if we turn on that same entry target, these will come down a lot more. Looks like something I need to adjust with the indicator, but oh, there we go. Right over here is the entry, so they're much smaller depending if you're long or short. But I'll make sure that these are aligned with the arrows. There must have been this short entry right here, and I got things a little bit confused. So you just have to understand. You could, instead of doing these, you could also just draw regular RR boxes. All right, back to the settings. I personally like to have as much as I can off just to keep my chart cleaner. Something I just recently added to the indicator is alerts. So you can set up alerts for continuation entries, retracements. Sometimes a lot of people won't trade the retracement. They'll wait for the retracement to complete and then trade the continuation. But sometimes there might be an SMT with ES where ES takes the high, but NQ doesn't. So the retracement will actually be stronger and take liquidity below the continuations. And that's why it's good to have all of them on to understand that retracements might be stronger than the continuations. You can see right here is external entry. We had a retracement and we went a little bit higher up before we had another external entry down, and then we had a retracement which was much weaker. And you just have to play with the indicator a bit, look at the higher time frames, lower time frames, and you'll see why sometimes retracements might be stronger, because we needed to grab more liquidity from below or higher above before making the actual move. So you can turn on alerts and you can get them into your app or on your phone or whatever you use for TradingView. So alerts also for certain time frames. So you can adjust what time you want alerts. So maybe you only want them in the mornings from 9:30 to 12. So you could turn that on and you're going to only get alerts on your phone from then, and you might not get alerts during accumulation during Asia or different times where after hours where volume might be slower. So that's what those are. And you could also set the alerts where there must be an MTF sweep or there must be a Killzone sweep before an alert can be alerted to you, so you're not getting spammed with too many entries all day. And again, with these external, this was the risk reward boxes for possible entries and stop losses and whatnot. So if I go back to where was I, you could show those boxes here. You can adjust where the stop loss is. So you can do the actual swing low, you can do the nearest pivot, or you can do a certain number of points. So maybe you only want to risk 20 points for your stop loss. The box will automatically draw it for you. I personally just have it the nearest pivot. It's cleanest for me, so I keep it there, but you can see how it adjusts for you automatically. Internal fixed points, you can choose whatever you want. And then if you want a little bit of a buffer from your stop loss, you might want to maybe a little bit lower than, let's just say the swing low. You can add a slight adjustment there for a number of ticks. An NQ4 ticks would be 1 point. So just in case you might get swept out or it has equal lows and then pushes up, you have a little bit of a breathing room before the actual stop loss does get hit for you. But totally up to you if you want to use these. It's just a good visualization to show where targets can be and where stop losses can be. So you can fade off old entries. You can show the number of boxes. You can have up to 50 or the latest trade, whatever you want. So you could keep it like that. You can show how far you want to extend the box. Maybe you just want it skinny for reference, or you want it to extend all the way out to the current candle, or maybe 10 candles long. That's what this would be for. And you can adjust the background of the boxes. So that's what those are. Show TP1, TP2, TP3. So that's where those dashed lines are. You could extend them how far you want, and the risk reward for them as well. Those are just graphics for those same entry boxes. So time frame alignment is, let me actually cut here and then we'll start a new record. Next part of the settings, we're almost halfway there, so we'll talk about time frame alignment. I have it automatically on. So basically what this usually, you just leave it the way it is, but let's just say you're on the 5 minute, for example. I talk about that a lot because that's what I use the most for entries. What this does is automatically aligns your time frame alignment, so the 1 hour and the daily automatically get aligned. So if you have multiple toggles on that work with the higher time frame and the middle time frame, it'll automatically know that it's the 1 hour and the daily. Or let's say you're on the 15 minute, it'll show the 15 minute as the lower time frame, the MTF would be the 4 hour, and the higher time frame would be weekly. So as long as all these certain things are aligned, then your entries will plot based on what filters you enable up above in the settings. If, let's just say, you wanted to align the daily, or let's just go with like the 3 minute with the middle time frame being the 1 hour or the 4 hour, and then the higher time frame being, for example, the weekly or whatever else it might be, you can do that manually here, but most of the times you just leave that alone. It's just in case you have a different model or want to align different time frames, you can do that here manually yourself. And then higher time frame settings, just keep that the way it is. These are just presets based on the manuals. And then same thing, this was just for the settings with the script. I had to have this, so just in case you're doing the manual time frames, you could also choose a lower time frame for where you want the entries. And the next part of the settings show is the middle time frame and higher time frame candles, and that's what this would be on the chart here. So let me just move over for you. So showing these candles, it's a good representation, like a good visual. So if you want them on your chart, you don't have to have them on. You can have a certain number if you want, just 3 of them to show based on the last 3 candles, or 5 of them for the 1 hour, whatever you want. You can adjust those, show them on, this is the higher time frame candles. So based on time frame alignment, again, you can get a better visual understanding on the lower time frame with the middle time frame and how the higher time frame looks. So let's say, like for a draw on liquidity on N2, for example, you can see the daily candle, we had a nice bullish engulfing here. We swept liquidity, we had a nice long, and then the next draw on liquidity you would want, be like, all right, so we closed pretty strong here. What would the next draw be? So you could target the next wick high or the next gap, and you could see the next day, which would have been February, Tuesday. So this would have been, today's Monday candle, trading this after Asia, so the new candle is plotting. But you can see we also closed bullish, so bias is still showing that it's bullish, so we could still be targeting this wick here at 517 or even higher. So this gives you a good representation, like, was a higher time frame swept? And then on the middle time frame, same thing. This is the 1 hour. You can see we're forming a nice little trend line. So once you do see the 1 hour becomes bullish, you could start to target areas on the 1 hour based on the 5 minute. And once you zoom in, it's a lot cleaner than what it looks like now. But you can kind of see this is based on what's going on here. This is the 5 minute, this is the 1 hour, and then this is the daily, and it aligns with the actual perfect pricing as well. So you could turn those on or off to you. It's a good visual. I like to have them on just to get ideas of where we could be heading for liquidity. You can turn those on or off. Buy side liquidity, sell side liquidity toggles. I usually have them on, so it helps to show where we could be targeting. Wicks, Killzone highs or lows are considered buy side, sell side liquidity, And then, you can turn those on or off as well. If I turn those off, you can see that the extensions from New York AM, for example, right here, they won't extend. But it's good to have them on because we could literally just sweep liquidity and then reverse, or that could be a great target for you. So it's good to have those extended to know where price could be drawing to and where it could possibly reverse from. I just have this Fibonacci box on, but just to see standard deviations, you don't have to have that. That's just another Confluence. I'll probably be adding to the indicator as well for external entries to show, we might just go to 2R or 4R. So it gives me targets for deviations. So yeah, buy side, sell side, those would be the green and red lines on the indicator, because I also have pivots, which the buy side and sell side align with like higher highs, higher lows, lower highs, or lower lows. And that's what these two are here, versus pivot liquidity is just the white lines that extend. So they might not have made a higher high or higher low, but they made like a meaningful wick. So based on, left side had two bars, right side had 2 bars, so something like that, it would draw me a wick. And you can manually draw your left bars or right bars. So obviously the higher these numbers are, the less white liquidity lines you're going to see, because those are stronger wicks that maybe aren't higher highs or higher lows, but we had a reversal from them. So those are also good draws on liquidity that can be taken, versus the higher high or higher low buy side or sell side might not be taken. So those might just be internal pivots that we might just tag before holding the stronger buy side as support. So we might just get the internals, if that makes sense. So for example, we might just take these 2 internal pivots, but not the higher low or lower low that could plot. Once price gets closer, it'll extend it out. But that's what basically that means over there. So for example, this one right here is a good example. It's a lower low and it's a New York AM low. So this would be a strong quote unquote support area, where if we break this structure here, then that usually means we could be going lower, because it's a higher low, higher high type of thing, depending on how we close. So that's what those are. You can turn those on or off. So I have a toggle to restrict entries to only happen during kill zones. A lot of times, after a kill zone or before a kill zone, you might just chop around, and you could just turn on this box and entries that aren't inside a kill zone, like let's say right over here between London and New York. These entries are going to go away because they don't align inside of a kill zone. So a lot of people like to wait for the actual kill zone to start before taking your trade, just to avoid lower volume or accumulation. So restrict entries, if I turn that on, give it a second, didn't work, but something that I'll fix. I wonder why. Let's see, where was I? So yeah, restricting the entries will block entries that are not in certain kill zones. And then use Asia, use London, use New York. That's what these entries would be blocked on. So for example, for some reason it's not loading, but I'll make sure I'll go back in the script and double check that. But we'll crop that out in this video and then I'll explain it and then go back. So if I have kill zones, restrict entries to kill zones, if I turn that on, only entries that are inside these kill zones will plot. So it helps clean up a lot of entries, or let's just say before London or before Asia, maybe we chopped around for a bit accumulating. It'll block a lot of entries that are inside the actual kill zone. A lot of ICT users like to wait for the actual kill zone before entering a trade. So this will, if you turn that on, it'll block those entries from plotting if they're not in a kill zone. And then right over here, use Asia, use London, use New York lunch, New York PM. If those are on, that's basically when the entries will plot or not plot. So that's if you keep all these on. And then the actual box, obviously the box is showing. So if you have these on, the boxes are going to show. If you turn them off, then you're not going to actually be able to see the kill zone boxes. So totally up to you if you want to have a cleaner chart, or change the colors or adjust the times of your kill zone. Sometimes people do Asia maybe from like 8 to 10. I like to do 8 to 12 just so that you can kind of see where the midnight open area as well. But you can adjust all the colors and times for the boxes there. And you can even, like, let's just say you only want entries during specific times. You could just have one of the boxes on and do, like, for example, New York from like 6 a.m. to 12 p.m. Only have that selected and turn all these off, and only entries will show during that quarter of the day. And show statistics table, if you don't want that on your screen, you could just unclick that, turn that off, or if you want to move it to a different area on your screen, you can do that as well. Totally up to you. Enable equal highs and lows. That is a good thing to keep on, because let's just say, on the higher time frame, for example, like the 5 minute or the 1 minute, there's equal lows on NQ. They work very well as targets, as drawn liquidities. So you could keep those on. And, it's just a good confluence to see, like right here, we had equal lows. Indicator drew that automatically for you. So a lot of times, you'll see a long entry, but there's equal lows on like NQ, for example, or MNQ. So people won't enter a trade if there's equal lows until those are swept first, and then you can go long after that once the entry confirms. So I'll try to include that more with entries in the indicator and whatnot, but it's a good visual just to have for now. And let's keep going. Where was I? So yeah, you can adjust the thickness of those lines, how far back you want to look, the solid, dash, dotted, however you want them to look, colors and whatnot. So the internal premium discount, that's what this is right here on the indicator. Swing low to swing high. Bottom 50% would be discount for longs. Top 50% would be discount for shorts. So, that's a good visual you can see on the chart for the swing high and swing low too. Maybe we have a long down here and we target 50% of the leg. So that could be a good liquidity target as well, just to understand where we are in the swing high to swing low. So SMTs, obviously, you want to keep that on if you're trading SMTs, displaying the visuals, like right over here, SMT, if I turn that off, you're not going to be able to see the SMT visual. So maybe you want that on your chart, maybe you don't, totally up to you, but that's what all these settings are here for. And you can manually compare your symbols. So let's just say sometimes M and Q, something I'll probably work on is adding like a triad SMT where there's also YM or the Russell. Sometimes people want double confirmation SMTs where ES had an SMT and YM had an SMT. You can manually adjust this too. For example, YM and futures, and you can use that as your SMT instead of ES. You can do that manually, or you would have to turn this off and then change this to manual. But auto select is good for M and Q. Automatically it's an SMT with ES. For gold it has an SMT with silver. For Bitcoin it has an SMT with Ethereum. So those are just like the automatic ones I've set. If you want any other SMTs, feel free to drop a comment or in the Discord leave a message, and I can work on adding that for you as well. And you can adjust like the same thing, like the pivot liquidity, instead of buy side sell side liquidity, you can adjust the sensitivity of the strength of your pivots to maybe higher, stronger pivots or weaker pivots, whatever you want. I just have it on 2 and 2 just for, it's not too strong, not too weak, it's like right in the middle for me. And require candle direction, that's pretty self-explanatory. If there's 2 green candles you want those two to connect versus from the lows or two short candles from the highs. That's what that means. And requiring CISD for SMT lines. So an SMT is not going to plot unless until the CISD plot. So a really good model to trade is basically just an SMT and only once there's a confirmed CISD. So once the confirmed CISD happens, then the SMT will plot, and that just gives you stronger confirmation that, all right, we had the SMT and we confirmed the change in SID delivery. So now let's take this trade. Otherwise, you would have a lot of SMTs that aren't confirming yet, and chart could be messy. It's not confirmed on your change in SID deliveries, and it could get a little bit messy. Something cool I also added to the indicator is show last wick SMTs. So let me try to find a couple for you. Basically, what it does is, here's a perfect example right over here. I don't have it like built into the logic or entries or whatnot, but here's an example of a show last wick. So there's an SMT here with ES because ES did not take the high of this candle, but NQ did. So that's why that plotted, and you can use that as a confluence, or even here's another example. A lot of times I've seen good reversals with the last wick SMT as a confirmation as well. So you could have that as an extra confirmation for a reason to go long or short. And you can see the actual CISD happened and the last wick was there. Let me see if I see any other examples. Here's another one here. ES didn't take the high, but NQ did. But you can clearly see that ES was higher, stronger, and it pushed NQ up. And we tapped into this fair value gap before pushing back down. So, you're having to know the higher time frame draws on liquidity, but looking for reversals can give you a good idea, like we might be reversing soon, or wait for the CISD because of the SMTs. So that's that. Let's see, a lot of different settings. So obviously turn on the CISD, showing the lines and labels. You want to have those on so you can see where we might reverse from. You can change the colors. You can change the swing line, so the swing high and the swing low, you can change the color of that. And then internal line colors, that's basically those internal pivots from the buy side, sell side. So I'll actually remove that because that's kind of redundant. You can change the labels, whatever you want for the CISDs. You can make the lines a little bit thicker so you can see it cleaner on the chart. And you can extend the lines by a few candles or whatever you want, 10 candles, 3 candles. I like to just have my chart as clean as possible so I don't extend things too far if I don't have to. And if you keep old CISD levels, you can see where old CISDs happen on the chart, where maybe there was a bearish one here, a bullish one here, for example. The chart will show the old ones there, maybe if you're using it for back testing or whatever you want to do with that. So show swing dot labels basically shows you right around here, you're going to see a little circle, and it just shows you where price reverse from. Here was an example right here, price reverse there at that swing, and then we had this change in state of delivery. These plot only after you get the change in state of delivery. This is like the confirmation that that's the swing high. It's just another visual that you can use for the swing highs and swing lows. Can't see it here, but it could be blending in with the fair value gap. Show swing lines, that's the swing high and swing low. It's good visuals to have on if you want them on, but like I said, you don't have to. And then here's another, just a visual of like higher highs, higher lows, lower highs, lower lows. The chart will show them for you where they were. Like right over here, here was a higher low. We took that out, had a lower low, and then took out this lower high, created a higher high. So let's just say, this could be a manipulation. Like once we close below that, then, we can start to close way lower, but we had a little pullback here then. So that's why the CISD was here for the short entry here. And then I have the FVGs. FVGs are basically bullish and bearish gaps on the chart. So these settings here are for your middle time frame. So showing the bullish and bearish middle time frame FVGs. and inverse fair value gaps. So you can see, like, let's say you're in the 5-minute, these will draw the 1 hour fair value gaps and inverse fair value gaps on the bullish and the bearish side, and you can adjust the colors. And as price gets closer to it, then the FVG extends out until we actually touch or get super close to it. So you can adjust how far or close you want it based on that. And so that's what these are. The lower time frame fair value gaps are basically example right here. This is on the 5-minute, a small gap that we created, so it automatically draws that for you, and you can choose your colors and inverse fair value gaps, whatever you would like to do there. It draws all that for you automatically, so you can turn those on or off, whatever you like. It deletes the violated ones, or you could keep them on if you wanted, but I personally just, like I said, like to have the cleaner chart, so that's all. Maximum number of lower time frame gaps, just because the lower time frame is way noisier, so you don't have to have as many gaps. So I have it set to 40, which is more than enough for what you need, and it'll automatically choose which time frame you're on. So just keep it on chart, and it'll, whatever time frame you're on, the 5-minute, it'll draw the fair value gaps for you there. So you don't really want to mess with that. Same thing, it has the approach. So as price gets closer to the fair value gap, then the drawing extends out. So until we get really close, you can adjust this, let's just say to 10, for example, for both of them. And as price might not touch it yet, but as it's approaching it, it'll extend further for you. And then show Fibonacci levels. If you use fibs for your swing highs to swing lows, maybe you want to wait for the 618 instead of 50%. The indicator will draw the fib levels for you right over here. So maybe you want to wait till you get a deeper entry below 618 or 789. This is optimal trade entry areas where you can look for entries before going back long. You could use premium discount, or you can use the fibs, and then you can adjust your fibs whatever you'd like there, and the size of the text for the numbers there. And yeah, that's basically it. These are just for the confluences, how far you want them from the arrows. I have this just so that the confluence and the arrow don't overlap each other, but that's like a basic overall view of the indicator settings. Like I said, I'll be going more in depth with the actual biases, open bias, actual entries on the chart, trades. We'll go over all that. If you like what you see here, feel free to join the Discord if you're not in it already. Try the indicator out, and yeah, you can go from there. A lot of different settings to play with, and like I said, the more you have, it doesn't mean that it's better or worse. I like to just keep it simple for now. I like to just trade on the 5-minute, align my entries with the 1 hour open, and trade the bodies. Try to stay away from trading the wicks and just trade the body of the candle. So for example, we had a short entry here. This was at 9 o'clock, so that would be this candle here. We plotted short here, and it's trading the body, so you could target 50% of the wick or the low of the previous candle, whatever you would like, depending on the biases that agree with you. And yeah, that's basically it for most of the settings so far. If you have any questions, just shoot me a DM or a comment, whatever you'd like. So before touching anything, I do want to explain how this indicator is designed. The defaults that I have on normally are intentional. This is just like a simple model you can trade from. The more, like I said earlier, the more entries, the more boxes that you have checked, the less entries you'll see on the chart. So for example, let's say I turned on require SMT for internal and external entries, and require a higher time frame bias for internal external, and you'll watch the difference in the chart. You're going to see a lot more entries disappear because they don't align with the toggles that I enabled. Let it just give it a second to load. You can see there was literally no toggles on today. No entries today. If you traded after New York, there was one from Asia session from last night, and literally none other until since last Wednesday, and you can tell that wouldn't have been a win. So the more boxes you have selected, it might be for your model, your entries, but you can have a lot less entries than removing certain toggles. So I like to keep it simple, just require MTF open bias. And what that means is just, let's say we're on the 5 minute, it aligns with the 1 hour, which would be the MTF. So as long as the 1 hour candle open is bullish and the 5 minute plot's a long entry, then you're going to get entries that support that direction. So think of your settings as context and confirmations. Whatever you see here, I have a toggle for show confluences. So let's say you had no filters at all, the confluences will pop up and you can see what each entry is and why it plotted. So for example, here's an external CISD, which means that external liquidity was swept. We had a change in state of delivery and an IFVG. We tapped out of a MTF, so that would mean a 1 hour fair value gap. We swept the Killzone, which would mean New York PM. This is the purple box here. And we also swept the MTF candles high before going short. So we swept the previous 1 hour candles high, and that's why this entry is plotting here. And you would enter right at the arrow plotting, put your stop loss wherever you would feel safe. You could put it at the swing high, or if you want it a little bit tighter, you can pick and choose where you would want that. The safer the better. But you could target 1 hour, 1.5 hour, 2 hour, whatever you think. That's the biggest thing. You have to know your draw on liquidity, and you can see there's some. If you had an entry here, you could target any wicks that you see that stand out. Here's a low here, here's a low here, and then you can see this was a new week opening gap, and we had a huge gap here as well. So most of that got filled in, and then this wasn't a bad entry at all. We dumped all night until New York opened in the morning. So that's just an example of why you would enter this trade. It tells you all the reasonings. So the more higher confluences, like a fair value gap, liquidity being swept, those are high confluences that you would want to enter a trade. Versus here, you can see we had an internal retracement. Obviously, retracements are gonna be weaker after an external CISD, but let's just say this retracement stopped out this external entry. Then that would mean that we're going to grab more liquidity, and you can see later on in the day we ended up going to this fair value gap on the 1 hour and then started to pull back from it a little bit. But let me not get too distracted. There's a lot to talk about, and we'll go through the settings first so you understand what's going on.